Good morning. It's Monday, July 3rd, 2023. Happy Canada Day weekend. Canada Day observed. Happy 4th of July. Happy 4-day weekend, beginning of July, beginning of Q3, a new quarter. And you can see I have S&P futures up. Pretty lackluster trading session, as one would expect. Markets closing early today. Volumes very light, again, as one would expect. And just sort of consolidating here around 44, 85, 44.90 on the E-mini S&P futures. Pulling it out a bit, you can see we're in a very nice uptrend. This breakout from the megaphone pattern continues trending higher. We had, obviously, 2 weeks ago, we had a little correction, very small, probably 3%. That was bought, as we would expect, in an uptrend. And now we're testing this 4,500 level. Now, obviously, 4,500 is a big round number. It's a psychological level. But at this point, you have to expect, just with the strength of this trend, the fact that the market breadth is expanding, more sectors, more stocks are getting involved in making new 2023 highs or new 52-week highs. There's no reason to try to call a top here. There just isn't. And even the economic data, it's really interesting. I mean, the inflation data continues to moderate, and inflation continues to decline. There's a segment of the economic data that is stronger than many expect or expected. And there is a segment like the manufacturing sector, new orders, that is weak. And, we got that, we got the ISM this morning that missed expectations. Prices paid missed as well. So put it all together, I mean, it's a mixed picture, but overall the economy is hanging in a lot better than one would, typically expect, with the Fed having tightened so much so rapidly. But a lot of it has to do with wage growth. The fact that wages have increased quite a bit the last couple of years, and that is continuing to bolster consumer spending, new home sales, et cetera, et cetera. More money people have in their pockets, the stronger the economy tends to be. There's more activity, right? So anyway, turning to gold. Gold is having a nice start to Q3, nice start to the week here, up to 1938 on the front month futures. And you can see that something, obviously, this was around the time of the market open in the US, and the ISM print definitely helped to bolster gold. Pulling it back a bit, you can see that last Thursday, this dropped down to 1900. That appears like it could mark a key turning point. It really does feel like that could have marked a key turning point. I don't think we're going straight above 2000, but maybe that is an important low. Maybe it will be retested, but the fact that that was such a rapid V bottom exactly at 1900, and seasonality is obviously turning favorable now. I talked about this last week with this blog post. This was more focused on the miners, but gold also has seasonal tailwinds here for the next couple of months. But yes, turning to the miners, we should expect a lift this week and maybe into early next week. But typically there's another shakeout towards the end of this month before a sustainable low is put in place in early August. And then we get that that August through Labor Day rally that is so well known and usually so uh, pronounced. So gold, great start to the week. Now, obviously, 1940 is a level, quote unquote. Um, and then obviously there's a lot of price memory up in the 1950s up to 1960. So, great start to the week, but I wouldn't chase it at 1938.30. But maybe we've started a two steps forward, one step back, sort of stair step higher uh, that could last for a couple weeks or maybe longer. Again, this is really interesting, and this sort of goes back to the mixed picture in the economy. The fact that the 2-year yield has climbed almost all the way back to 5%. I mean, this morning, the morning high was 4.96% on the 2-year yield. We're at 4.90% right now. And the fact that this has climbed back, I mean, this is over 100 basis points since early May. And it's no accident that gold peaked here when the 2-year made its low, right? So let's just take a look at that correlation. Definitely, these two definitely do have a strong correlation. Yeah, so it's negative about 80%. So definitely a negative correlation. The higher the 2-year yield goes, usually the worse it is for gold, the lower gold goes. But what's happening today, the 2-year yield is moving up above 4.9%, and gold is moving up. So what gives here, right? The correlation might be shifting a little bit. And generally speaking, I would say that's bullish for gold. The fact that it is sort of untethering itself from being just a yield trade. So gold is holding up much better than one would expect, considering that the market has now moved to pricing in another rate hike this month. So we'll be at 5.50% on the Fed funds rate. The 2-year yield is almost all the way back to 5%. And there is even more hawkish talk by Fed members that there will be another rate hike possibly in September, right? So, hawkish Fed, higher rates, generally all negatives for gold. So the fact that gold is holding up above 1900 and moving up here to start the week is interesting. What is causing this relative strength in gold? Well, I don't have a crystal ball, but there could be a number of things involved, in it, including, China could be stepping in as it has done, in the last year. China bought a lot of gold last year, and it tended to do so on dips. It supported the market at key support levels. I mean, if you think back to 2022, how much time did gold spend around the 1800 level, right? And when it seemed like, inflation print was out of hand, or the Fed raised 75 bips and gold couldn't crack, it kept holding support near 1800. Who was that buying there, right? And that was probably central bank buying, because frankly, there's only so many market participants that have that big a size, that can absorb, such big selling in the market, right? There's some speculation the new currency of the BRICS is going to be backed by gold. I'm sort of skeptical. They're talking about Moscow gold exchange. I mean, I don't think I'll be trading gold in the Moscow exchange anytime soon. But these are all things that are thrown out there by the gold bull crowd as being positive catalysts. I'm not sure. I'm not sure, but it could also be just that the market is saying, okay, the Fed cannot continue to hike without something breaking, something big breaking. And so far, the Fed has managed to stabilize things. We had the regional banking crisis March, the Fed managed to stabilize things. Um, but, you know, if we think back to 2007 and 2008, the market, the S&P, did make a new high in October of 2007. Now, by all accounts, the global financial crisis had already started by October 2007. Some say it even started in early 2007. Definitely by summer of 2007, there was major pressure and stress on countrywide financial, and there were cracks starting to form, right? So, how did the market make a new high in October? Well, markets do strange things, right? And sometimes it's not always logical. It's not always the quote unquote right move. And there's things that have not risen to the surface yet that could cause price action to sort of go one way prior to quickly turning around and going the other way. So there's definitely the possibility that markets are sort of climbing on this AI, falling inflation theme. Fed is almost done. Goldilocks, yada, yada, yada. But things could look a lot different a month from now or 2 months from now, right? So gold might be pulling forward some expectation of a recession in the second half of the year and the Fed having to um, turn around and start to ease. Now, right now, the market is not pricing in much easing until next year. And the Fed is very clear, do not expect a rate cut from us this year. So it's interesting. It's definitely a bit of a head scratcher, but you can see this manufacturing sector. I mean, this is one of the clearest downtrends out there in any chart, right? So this is the lowest level on the ISM index since May 2020. Now, obviously, that was a very sharp downturn. That's not what we're having now. We're having a steady grind lower. And the fact that, new orders and inventories are so now deeply in the red at levels that are typically seen during a recession. And think back to even like when things started to tip into the red in the second half of 2019, the Fed started to cut that, right? So this is a unique situation where there's certain sectors of the economy that are at weak enough levels that historically the Fed would be starting to ease. But then we have a tight labor market and rising wages, and even, sort of optimistic forecasts for inflation still have inflation above 3% by year end. And the Fed is saying we're sticking to 2%. So how can they cut if inflation is still more than 100 basis points above their target level, right? And so it's a perplexing overall backdrop out there, and we could spend a lot of time talking about it. Not sure we actually figured much out. Looking at the market today, Tesla really stands out. Obviously, they had some really big beats on their sales numbers, and look at what Tesla has done in 2023. I mean, think back to where Tesla was at the end of 2023, right before New Year's, and how negative everybody was on Elon Musk, the Twitter acquisition. Tesla's super overvalued, competition is coming in, margins falling. Right, there was a lot of negativity on Tesla at the end of 2022, and look at what it has done year to date, up over 150%. So, whatever it was, 400 billion market cap at the end of 2022, up over 150% in 2023. This is absolutely remarkable. And once again, when we see these sentiment extremes, when we see everybody to a man negative on something, more often than not, I don't know if it's 4 out of 5 times or 7 out of 8 times or 9 out of 10 times, it is a buy when everybody is is in alignment that this is how it is. It's either super negative or it's really super positive. That's a fade signal, you know. Um, and frankly, Tesla's technology is also sort of world beating. Their EVs are sort of head and shoulders above the rest. I see more Teslas out on the road every single day. Uber, I mean, you know, when I get Ubers, half the time it's a Tesla now. So we got some mass adoption going on here. And we could talk about valuation till we're blue in the face, but just look at the chart. And if valuation arguments are going to keep you from making money or cause you to lose money, I'm not sure how valuable they are, quite frankly. So I'm not saying to chase it here, but I just think this is a very interesting case study. And Tesla has been a market leader since 2020. It has led on the way up during the pandemic boom, second half of 2020. And then it led on the way down when the market really started to roll over in early 2022, right? Sort of end of 2021, early 2022, market started to really show some weakness. Tesla was putting in lower highs and then making lower lows, right? And obviously had an absolutely waterfall decline from September to the first week of January 2023. So you could look at this big picture weekly chart and say, okay, bear market rally is complete. Possible interpretation. Certainly the $300 level is a big key psychological level, and we're almost there. So again, I wouldn't chase it, but it is interesting to note how strong Tesla has been, and generally it has been a market leader, sort of a leading indicator actually for the broader market. S&P, again, we talked about that 4,500 level, but again, there's just not enough evidence here that we're anywhere near a top. We'd like to see, prior to really taking some bearish positions and shorting, you'd like to see some confirmation that the market has put in at least a chart pattern top and give yourself a level to sort of trade against, right? IWM, so small caps, this is a golden cross now. So small caps have been the laggard throughout March, April, May. They're just starting to get into it here. We're up to 188 on the IWM. So this is not, I wouldn't call this a breakout, but we're at the breakout point. So this is something to watch. And we can now say this is in a confirmed uptrend. So again, a market that had weak breadth in May and April and May is now seeing breadth expansion, more and more stocks getting into it. And frankly, I think the number one catalyst for that is falling inflation. The fact that we can say that inflation is clearly in a downtrend and clearly moderating much closer to levels that would make the Fed comfortable. Again, we're not there yet, but we're getting a hell of a lot closer. And that just helps everything in the market. It causes multiple expansion when, inflation moderates back to sort of target range, multiples expand, and the market continues to price in easier Fed policy further out. It's not there yet, but starting next year, if the trend continues, we certainly could expect the first Fed rate cuts in 2024. The VIX. So this is also an interesting chart because, the VIX is basically going counter to the S&P. As the S&P has risen since March, the VIX has fallen. I posted this chart mainly because I think it's important from a swing trading perspective that when the VIX is in a clear downtrend under falling 50 and 200-day moving averages, from a swing trading standpoint, that is a signal that you want to sort of extend your time frame a bit on swing trade. So if normally as a swing trader you hold positions for 2 or 3 days, when the VIX is down to 13 and it's in such a pronounced downtrend, moves are just going to take longer to materialize. It's not, for example, OIH trade. I bought OIH at 269 a couple of weeks ago, got out on day 2 or day 3 of this uptrend for a profit, a nice profit. And normally my swing trade time frame is something like 3 days, maybe 4 days tops. And look at how this trend has continued. This is now 6 days up in a row in OIH, and it's actually starting to look like this was a failed breakdown, and this has formed a sort of chart pattern bottom that it's now breaking out from. I wouldn't give it an all clear confirmed breakout yet, but it's sure getting close to it. And why cut your profit short? Why, when the market is trending so nicely, and there's no reason to sell and get out, why do it, right? And so when the VIX is above 20, markets are more volatile day to day. Totally, I get it. Take profits day 2 or day 3 of a move, and look for a better place to re-enter. But that's just not the kind of market we're in. We're in a much lower volatility environment, and stocks are trending nicely. They're trending higher nicely. Freeport-McMoRan, again, another example of a stock that had a failed breakdown at the end of May and is now in a confirmed uptrend. And again, like cyclical sectors like oil or copper producers or Caterpillar, these are all now in confirmed uptrends, and just confirming the strength that we've been seeing in the S&P 500. And obviously, the leadership is tech and stocks like Tesla and Amazon and Nvidia, but the breadth is widening out. I mean, just look at the heat map today. You got UPS, getting in on the action. You've got energy acting strong, right? Even the industrials are in the green after the weak PMI print. Real estate, if you told me 6 months or 7 months ago that the Fed was going to be going to 5.5% and threatening to go even higher, I would say real estate would be in the toilet. Exact opposite, has happened. And I would say the number one catalyst for that is the fact that inflation has moderated so much and is in such a clear downtrend. This is another interesting one, Bitcoin, right? So why is Bitcoin acting so well in 2023? I'm not going to go into the whole Bitcoin conversation, but I mean, I think there's a couple of possible answers. I think Bitcoin had a complete sentiment washout at the end of 2022 with the FTX scandal. I don't know how sentiment could have possibly been worse than having the biggest exchange and sort of the biggest figure in the cryptocurrency space come out as a fraud and a Ponzi scammer, right? It reminds me of Madoff at the end of 2008. So months after Lehman happened, when we're well into the financial crisis and the Fed is doing everything it can, the Treasury is doing everything it can, Madoff is unveiled to be a Ponzi scheme, right? And that just sort of put in a sentiment capitulation in the final weeks of 2008. And that was not the exact market bottom, but it was pretty damn close to it. And if you bought a basket of stocks in the final weeks of 2008 and held them for a year, you did pretty damn well, right? And so this is a good parallel to what we're seeing with Bitcoin. And also maybe the liquidity situation just out there is not as bad as many seem to think it is. And just like I could show the chart of Tesla, this is a very similar structure, you know. And so maybe this is also a sort of a leading indicator. And also, I don't think Bitcoin would be above 30,000 and Tesla would be at almost $300 a share if the Fed was actually committed to just stomping the market in the face and raising Fed funds to like 6% or something, right? I just don't see that. And I still actually think there's a possibility the Fed stands pat again here in a couple of weeks. I wouldn't bet my life on it, that's for sure. But if they do hike, maybe that really is the last one. Okay, just because they've kind of set the stage for it, you know, they might have to do it, but then they'll have a 2-month break until the next meeting, and maybe that will give them time to sort of really see that they've won the inflation fight and policy is restrictive enough that they don't need to do anymore. Just from a sentiment standpoint, you can see the S&P's at 84. Okay, that's pretty high, not extreme though. Going to precious metals, silver 18. That's pretty low, but not extreme yet. We got down to 12 last week. Palladium 12, it got to 10 last week. Gold is down to 24. So the metals definitely have some of the worst sentiment of any asset class right now. And the VIX as well. And those two sort of many times are pretty well correlated, you know. When the VIX is low and market volatility is low, investors don't seem to be as interested in owning metals, especially the precious ones. Again, I really do think there is a good shot that the junior gold miners may have seen a capitulation washout last week. Sentiment is pretty horrendous, and I saw a lot of stocks. I won't name individual names, but I saw a lot of stocks sort of show signs of a washout V bottom last week. You can do your own work and look through some of the major gold juniors, and you'll probably see the names that I'm talking about. Again, gold in a downtrend near term since early May, but it's come down to an area of potential long-term support near 1900. Certainly this 1923 level that was the August 2011 previous all-time high has been sort of a center of gravity that gold has continued to move up to and back down to, and this time was no different. We came back down to retest it and starting to move up again. And certainly from a candlestick charting perspective, Thursday was a hammer and Friday was a bullish engulfing that closed at session highs. You know, and again, we're seeing some follow through today. We're seeing some further gains. So overall, positive signs that Thursday's low at 1900 may have marked a key turning point. We talked about this. Silver has even stronger seasonality this month than gold does. You can see that it's one of the strongest months of the year for silver. And we've already reached what should be a seasonal low at the end of June in silver, with a pretty strong tailwinds through early August. And also, you know, this is happening, this sort of as we enter seasonal strength with really weak sentiment in silver. This is happening with silver bouncing off this 200-day moving average. Got almost all the way down to $22 an ounce last week, which is definitely a big technical level, a big area of potential support. So silver has fallen far enough since early May that it could certainly find a tradable low here. And the fact that this is also lining up with the 200-day moving average, extremely weak investor sentiment, and now we're turning into a seasonally strong month of the year for silver, sort of all lines up that, you know, we definitely could get a bounce here. GDX, again, in my blog post, I talked about this setup and the fact that Thursday printed a bullish engulfing. That was after the GDX made a new low, a lower low for this move, and now has continued to move higher for 3 sessions in a row, also near a rising 200-day moving average. Worth making note of, and definitely some signs that we may have reached, again, a tradable low in the GDX Gold Miners Index. 34, the 34 level for the GDXJ is a very big level, and it did actually touch that last Thursday. And just like I said, for the GDX, I can say for the J as well, tradable low may be in place there. Overstock. This is an individual stock that I've traded on and off throughout the last several years, and it finally last week had this big breakout short squeeze that a lot of Overstock longs have been waiting for. It's just interesting how this took shape. There's a lot of things going on fundamentally from the background, but they bought Bed Bath and Beyond out of bankruptcy. They basically bought the brand name for, I think it was $21 million. The market loved it. And actually, Gary Vaynerchuk on Instagram made a video talking about what a genius move this was. It does seem pretty shrewd to buy a well-recognized, retail brand name for a relatively small price tag, and then roll your existing business into that brand name. And Overstock has a relatively small market cap, pretty high short interest. And yeah, just technically it hammered out a quadruple bottom. Very rarely have I seen it quadruple bottom. This $17 area was tested 4 times since January, and that support held every single time. And look at this rise it's had since late May. Stock is basically doubled. Absolutely incredible move here in Overstock. And then MindMed, this is just a chart I continue to watch. It's a stock I trade. I'm not married to it by any means, but I think that this one is shaping up for a good second half of 2023. If you go to the medicalgold.ca blog, you can see we published this post on the FDA approval for MDMA coming in 2024. MindMed is one of the 3 companies mentioned in this article. Take a look at it, read it for yourself. Obviously, from a technical standpoint, it's forming this symmetrical triangle basically since February, and support holds on the bottom rail. And obviously the top rail has proven to be key resistance since February. But I feel like this stock is coiling to eventually break free from this triangle. And if I had to bet 60-40, 70-30, that resolution will be higher into this open gap here that goes all the way up to above $6 a share. Definitely some catalysts in the second half of the year for MindMed. The biggest one is their MM120 phase 2B for anxiety, expecting top line readouts in Q4. And also they are an MDMA play as well, because they have a phase 1 that they'll be doing as well for autism. So MDMA for autism. And it's kind of interesting because it's the R-enantiomer version of MDMA. So they have a different angle on MDMA than most companies, trials out there, right? So could also benefit from the FDA approval for MDMA in 2024. But just even from a technical standpoint, the fact this has also had a sentiment washout at the end of 2022, it has pretty good short interest as well. And it's been forming this bottoming pattern for all of 2023. So definitely a chart to keep an eye on. Thanks a lot for your time and attention to this video. If you found value in this video, if you enjoy my updates, please like the video and subscribe to my YouTube channel. Thank you. Have a great 4th of July.